What's going on, everybody? It's your boy Dev back with another video, and today I just want to go ahead and thank everybody for participating in my most recent videos. I also want to thank everybody for participating in the $1,000 giveaway. Again, I'm going to give a reminder: when I hit 1,000 subscribers on YouTube, I'm going to be giving away $1,000 to either one person, or I may be giving away $500 to two people. So make sure you go to my previous video. Make sure you watch it, and make sure you go ahead and follow the exact directions that are given in that video to be able to enter that $1,000 giveaway that I'm going to be doing at 1,000 subscribers. The goal is to possibly hit 1,000 subscribers by the end of 2020, so December 31st. That is my goal, to hit 1,000 subscribers. But today, I'm just going to be coming back with another video. We're going to be still talking about the foreign exchange market. And today, I'm just going to be giving the easiest possible strategy to use to be profitable in this market, in this powerful market. So the strategy today is called the price trap strategy. And what are you going to be doing? You're going to be looking for a key support and resistance zone, and you're going to be looking for the market to break out of those areas, and you're going to be able to trade these pairs effectively if you know the proper technique to doing it. So today, that's what I'm going to be going over. So make sure you get your notepads ready. Take down notes on this strategy, so that way you can be able to use it to be profitable in this market. So the first thing that I'm going to do overall is I'm going to come to the daily time frame. We're on GBP USD. I'm just going to come to the daily time frame, and usually what I like to do is for the last year, I'm going to come to 2020. I'm going to come to January 1st, 2020, and I'm going to find my highest level and my lowest level in the market that the market could possibly go with this pair. So I'm just going to go over here and grab my horizontal line, and I'm just going to I'm going to get my vertical line and I'm going to grab it at January 1st, 2020, January 2nd. And I'm just going to place this vertical line, and this vertical line is just telling me anything to the right of this line. This is 2020, and this is what the market did this whole entire year. None of this on the left will matter. So I'm going to grab my horizontal line, and I'm going to mark up my highest point and my lowest point where the market went in 2020. So my highest point will be all the way up here where we got this wick, and I'm just going to place that horizontal line right there. I'm going to grab it again, and I'm just going to place it at the lowest point. So I'm going to place it there. So after I get done, what this is actually called is our levels. These are our highest level and our lowest level of 2020. Now what I'm going to do is I'm going to come to the 4-hour time frame. In the 4-hour time frame, that's where I'm going to find where the market rejected pretty well. And what I mean by rejected is it came to a certain point. So let's come here. The market came up to a certain point, rejected, but then it came back down, rejected, and went the other way. Initially, what the rejection is came to a certain point and went the other direction. So I'm going to figure out where the market did that the most. So obviously I see we got a good area of support here. Support went back up. And if we come a little bit previous, it came to this area as well and rejected. So I can identify that as a strong support. So right here was acting as a support. So I'm going to grab my rectangle tool, and what I'm going to do with this rectangle tool is it's simply going to be a zone. It's not going to be a pivot or anything like that. It's going to be a zone. So I'm just going to go ahead and mark out this zone for this support here. So what we have to realize with the market is every breakout in the market will have a retest, no matter how long it takes to retest. And what I mean is retest is when it breaks out, it's going to always come back and correct itself and test that area of market structure. So once it broke out, it actually came back and retested in this area and went back up. So now what we're going to look for is we're going to look for another break and retest. So obviously once we broke out of this box for this sell after we had this good buy, and we got a big sell, and the way I see the sell is the market is going down. Sell is going to be the market going down. Buy is going to be the market going up. So we have a good sell here, but once we broke out of this box here, we're going to realize that the market continued to go down. But once we reach that box again, the market rejected. So what we have to realize is, I'm going to type this out. Every break out in the market will have an retest or correction. And we're just going to change this color to black. So we have to realize that every breakout in this market will have a correction. So areas of support resistance, history is going to continue to repeat itself. So if this zone was right here, an area of support and resistance here, if we come back in time, it's going to act as a support and resistance every time. Even if we continue to go back, it's going to act. It rejected a lot in this area. It still comes over and it still acts very, very well in this area. So history is always going to repeat itself. So this is a good, strong area of support and resistance, just based off of how many times they rejected this area. So I have a very, very area of market structure right here. So once we broke out of it, we retested it. So now we look for that sell again. Since we broke to the bottom, what this is going to mean is, at first, a support means the floor. So a support is going to be the floor. I'm just going to go ahead and type that out for everybody. Support equals floor. So we're going to have a resistance. Resistance equals ceiling. So what this was doing was, it was acting as a floor. It was a ceiling. It was a ceiling at this point. But since we broke out of it, came back and retested it, now it's acting as a floor. So what we have it doing here, once we broke out of the floor, it became a ceiling. So this blue line right here is now going to be a ceiling for price right now where it is today. So this acted as a ceiling once we came up. So initially what this means is, I'm going to grab my trend. I'm going to grab my brush. So what this was a breakout, correction, or retest, whatever you want to call it, and we look for continuation. And essentially what we call this is ICC. We call it ICC, and what that means is impulse down, correction, and then we look for a continuation. And what that's going to be is a lower low, lower high, lower low, and we look for it to correct again once it breaks out of this area of market structure. Once it rejected in this area, if it breaks it again, it'll come back and do the same exact thing. But let's say if the market went down, came up, and broke it above. So let's say, I'm gonna move this for a second. So if the market kind of did this, if the market went down, came up, and it continued up, what we would look for is that breakout there, that retest, and continuation. So it's going to be the same exact thing. All it's going to be is basic market structure. And if you watch my previous videos, I gave you how to identify those support and resistance zones, and then I gave you how we're going to identify those trends. So if I was to draw a trend line on this, obviously we are in a downtrend. So what I would look for the market to do after we touch trend right here, I'm going to look for the market to give me another lower low, which is lower than this previous low here. Look for a lower low, and then I'm going to look for it to come back and touch this trend line again for another rejection. And what that's just going to be is another break and retest, but we're drawing a trend behind it, which is going to give us another confirmation that this is a great trade to enter. So that's going to be the basic price trap strategy. You can call it price action, whatever it is, but this is going to be the easiest. This is going to be the easiest strategy that you could possibly use to make money in this market. Because this is a very, very smart strategy. We're actually reacting to the market. We're not predicting the market. And that's what we want to do as traders. Since we do not move the market, we aren't strong market movers. What we want to do is react to the banks. We want to trade with the banks. We want to think exactly like them. So I hope everyone enjoyed this video. I'm going to be back with more trainings. And again, make sure you go ahead and you like this video. Make sure you subscribe to the channel. Make sure you hit that bell. That way you never miss a video by me. And again, if you have not entered the $1,000 giveaway, make sure you watch my previous video that I just uploaded a couple days ago and enter that giveaway. I'm going to be giving away $1,000 to either 2 people or 1 person. It depends. So make sure you go ahead and enter that giveaway. Family, I'm going to be out. Make sure you stay tuned. That way you catch another video by Dev.